Have you ever thought about investing in gold and silver? It's a question that piques the interest of many. Like a shiny beacon, the allure of precious metals has captivated humans for centuries. But beyond their aesthetic appeal, gold and silver hold a significant place in the world of finance. They are seen as a safe haven, a hedge against inflation, and a way to diversify one's investment portfolio. In this fast-paced world where economies rise and fall, these timeless assets offer a sense of stability. Today we delve into the fascinating world of investing in gold and silver. We'll explore their importance, the benefits they offer, and how you can start investing in these precious metals. We'll break it down into simple steps, making it accessible for everyone. So, whether you're a seasoned investor or just starting out, there's something here for you. So, if you're ready to learn how to invest in gold and silver, stay tuned. First, it's crucial to understand why gold and silver are valuable investment assets. From ancient civilizations to modern economies, these precious metals have held a significant position. They are deeply rooted in our history, being used as a form of currency, a symbol of wealth, and even an object of worship. Gold and silver have a rich economic significance. They are globally recognized as stores of value, meaning they maintain their worth over time. Unlike paper currency, which can be printed in unlimited quantities and is subject to inflation, the supply of gold and silver is limited. This scarcity enhances their value and makes them a hedge against inflation. Gold and silver have demonstrated remarkable stability, especially during economic downturns. While the prices of stocks and bonds can fluctuate dramatically, gold and silver tend to hold their ground. They are considered safe havens, assets that investors turn to in times of financial turmoil to protect their wealth. During the financial crisis of 2008, for instance, gold prices soared as investors sought safety from the volatile stock markets. Not only do these metals serve as a buffer against economic instability, but they also offer potential for capital appreciation. Over the past 5 decades, gold and silver have yielded impressive returns, outperforming many traditional asset classes. Furthermore, gold and silver are tangible assets. You can hold them in your hand, store them in a safe, or even bury them in your backyard. This physicality provides a sense of security that digital or paper assets can't match. Lastly, gold and silver are universally accepted. No matter where you are in the world, these precious metals are recognized and valued. This makes them a versatile tool for preserving and transferring wealth across borders. Now that we understand the importance of gold and silver, let's move on to how we can start investing in them. This discussion will give you the knowledge and confidence you need to incorporate these precious metals into your investment strategy. So, are you ready to discover the world of gold and silver investing? Let's dive in. The most straightforward way to invest in gold and silver is by purchasing physical assets. When we talk about physical gold and silver, we're referring to tangible hold-it-in-your-hand assets. These can come in the form of bullion bars, coins, or even jewelry. Bullion bars are a classic choice, offering large amounts of pure gold or silver in a single purchase. Coins, on the other hand, are smaller and easier to manage, but they often carry a higher premium due to their collectible value. Lastly, jewelry is a more aesthetic way to keep your investment, allowing you to wear your wealth. Now let's dive into the benefits of owning physical gold and silver. First, they're real, tangible assets, unlike stocks or bonds. This means they'll always hold some sort of value, even in times of economic downturns. Second, they're private and confidential investments. There's no need to go through a broker or have your transactions be part of public record. Lastly, they're a good hedge against inflation, as their value tends to rise when the cost of living increases. However, physical gold and silver are not without their drawbacks. For one, they require storage. Whether you choose a home safe or a deposit box at a bank, this is an added responsibility and potential cost. Second, they're not as liquid as other investments. Selling your gold or silver can take time, and might not be as straightforward as selling stocks or bonds. Moreover, the price you get for your gold or silver will depend on the current market rate, which can fluctuate. Lastly, there's the risk of theft. Physical assets can be stolen, and while insurance can cover the monetary loss, it can't replace the actual item. While owning physical gold and silver may seem appealing, it's not the only way to invest. So, before you decide to invest in physical gold or silver, weigh the pros and cons, consider your financial goals and risk tolerance, and explore other investment options. Another method to invest in these precious metals is through exchange-traded funds, or ETFs, and stocks. Now you may be wondering, what are ETFs and stocks? Well, let's break it down. Exchange-traded funds, or ETFs as they are commonly known, are investment funds that are traded on stock exchanges. They are designed to track the performance of a specific index, sector, commodity, or asset, in our case, gold and silver. This means that when you invest in a gold or silver ETF, you're not buying the physical metal itself. Instead, you're buying shares in a fund that holds large amounts of gold or silver. Stocks, on the other hand, represent ownership in a company. When you invest in gold or silver stocks, you're investing in mining companies that extract these metals. The performance of these stocks is tied to the success of the company and the price of the metal they mine. Now you might ask, why would one choose to invest in gold and silver ETFs or stocks over physical gold and silver? The answer lies in the advantages they offer. First, they're more liquid. This means you can buy and sell shares in an ETF or stock with ease, unlike physical gold or silver, which needs to be stored and secured. Second, they're more convenient. You don't need to worry about storage or security, as these are handled by the fund or company. However, it's important to note that these advantages come with certain trade-offs. For one, when you invest in an ETF or stock, you don't physically own the gold or silver. This means you're exposed to the risk of the fund or company not having enough gold or silver to cover the shares. Additionally, investing in stocks exposes you to the operational risks of the mining company. In conclusion, ETFs and stocks offer a more liquid and convenient way to invest in gold and silver. However, like all investments, they come with their own set of risks and rewards that should be carefully considered before diving in. Now, let's talk about how gold and silver can help diversify your investment portfolio. First off, let's get a handle on the concept of portfolio diversification. Imagine you're at a buffet. You wouldn't fill your plate with just one type of food, right? You'd want a variety of dishes to enjoy a complete meal. The same principle applies to your investment portfolio. Diversification is the practice of spreading your investments across different types of assets to reduce risk. If one asset doesn't perform well, others might, which can help offset potential losses. It's about not putting all your eggs in one basket. Now, where do gold and silver fit into this picture? Well, these precious metals have a unique place in the world of investments. They're tangible assets that hold intrinsic value. Regardless of economic conditions, they will always be considered valuable, which is not something you can say about all investment types. Gold and silver can act as a hedge against inflation. When the value of currency decreases, the price of these metals often increases. This can provide balance in your portfolio, especially during times of economic instability. Moreover, these metals can offer protection during market downturns. When stock markets are volatile, investors often turn to gold and silver as safe havens. This is because their prices don't typically move in the same direction as other assets, adding another layer of diversification. In essence, including gold and silver in your portfolio can reduce overall risk. It's like having a safety net. If one part of your portfolio is falling, these precious metals might be rising, helping to soften the blow. So, to sum up, diversification is key in the world of investments, and adding gold and silver to your portfolio can provide balance, reduce risk, and offer a degree of protection against economic uncertainties. As you can see, gold and silver can serve as a safety net for your investment portfolio. So, are you ready to start investing in gold and silver? In our journey today, we've taken a deep dive into the world of precious metals investing. We've explored the innate value of gold and silver as investment assets, understanding their unique properties and roles in the global economy. We've navigated the various ways you can buy physical gold and silver, from coins to bars, and we've also discussed the benefits of investing in gold and silver ETFs and stocks. More importantly, we've highlighted the significance of diversifying your portfolio with gold and silver. These precious metals can serve as a hedge against inflation and provide a safety net during economic downturns. Remember, investing in gold and silver can be a great way to diversify your portfolio and preserve your wealth. So why not start today? Don't forget to like this video and subscribe to our channel for more investment tips and tricks. The information provided in this video or communication is for informational and educational purposes only. It is not intended as and should not be considered financial, investment, legal, or tax advice. The content is based on general principles and may not be applicable to your specific financial situation or needs. Always consult with a qualified financial advisor, accountant, attorney, or other professional before making any financial decisions or taking any actions related to your finances. Any investments or financial decisions you make are solely your responsibility. Past performance is not indicative of future results, and there are no guarantees of any specific outcomes or returns. While every effort has been made to ensure the accuracy and completeness of the information provided, we do not warrant or guarantee its accuracy, reliability, or suitability for your individual circumstances. We do not endorse or promote any specific investment products, services, or strategies mentioned in this video or communication. Any references to such products, services, or strategies are for illustrative purposes only, and do not constitute a recommendation or endorsement. You should conduct your own research and due diligence before making any financial decisions. In summary, this video or communication is not financial advice, and you should not rely on it as such. It is essential to seek professional advice tailored to your specific financial situation and goals before making any financial decisions or taking any actions.